Hey, what's up, guys? It's Jamie. It is Monday morning. I believe it is the 27th of August. I just passed a Gulf station. I saw that the gas prices today are $3.79 at that gas station, which has come down quite a bit, which is helpful. Very curious. A benchmark, a indicator of what's going on. The question today that you might be asking yourself, something I've been through many times, and it's just a small topic before I get in here, is what do you do if you've gotten yourself in a position with a company owning stocks where you are underwater, right? Regardless of what way you thought it was going to go, it didn't go the way you planned. So now you're underwater. And I'll give you an example. Just recently, I bought some Coinbase stock. I did a put option where I was selling the put, and if it wasn't stocks, I was willing to buy the stocks if they hit a certain price. Now they hit the price, and then it got filled, and now I own these stocks for more than what the company is presently doing. Okay, so and it could be you just shorted the stock, or it could be you just bought a stock. Like in this case, the stock was $90. That was the strike price that I had to buy them at, $90. At the time, it was trading in the mid-90s, right? And before that, it was in the hundreds. So it could either have gone back up to the hundreds with some news about, in this case, BlackRock, partner with them for Bitcoin, so where it could rally up even further, or of course it could go the other way. So I'm like, I'm okay owning it at 90. I'm okay with owning it at 90. It went to 90 before the expiration. I own the shares at $90 a share. I have 100 shares. I actually have 200 shares because I bought 100 more when it dropped all the way down to the 70 range. But for the 90 that I had before it averaged out those other shares that I had, meaning the cost per share, I had to commit to the $90 a share, regardless if it was $1 a share. I own them at 90. So I'm a loser all the way down to $1 or $0. So I'm stuck with those shares. Now, if I cash them in, this is a receipt from a drive-through Dunkin' Donuts. But if this was a contract that I get 100 shares of a company and I own them at 90 and it's trading below 90, at any point that I go and say, okay, cash it in, or what is it worth? All right, so they're worth $70 a share. So I'm going to get money, but I'm going to take a loss of $20 in this example a share, times 100 shares. Okay, now if I bought more shares, I'm going to bring my cost down, which I did. I bought it closer to 70, and that brought my shares from 90 to 83. So I'm still underwater, because right now as I do this video, it's trading around 71, 72. Now it's either going to drop down even lower, which is very possible. It could go down to $60 or $50 or lower, right? So all along the way, the value of my $90 ticket is losing its value. It's never going to expire, right? Unless the company goes bankrupt, of course. But it's not going to expire, and it could go bankrupt. It could go out of business, but I don't think it will. But that doesn't mean it won't. But whatever the company is that you bought shares on, whether you did what I just explained or you actually just bought shares of a company, you're like, oh, I like Amazon, I like Google, I like Tesla, I like Coca-Cola and Walmart, and keep filling in the blank with whatever companies that you have. You buy in, and then you're like, I own those shares, whether it's one share or 1,000 or 1,000,000 shares, and the company is not doing what you thought it would do. So my advice is, not my advice because I'm not a financial advisor, this is just me sharing what I'm doing, is what I usually do is, after being through these cycles, I generally try not to invest money that I would be devastated to lose. Like, I'm not betting my mortgage money or my kids' future on. Like, I'm just like, okay, this money for this specific investment, I got to be okay with it if things don't go well, or at least I have to be prepared in other avenues, diversity, where if that thing doesn't work out, I'm going to be okay with it. I won't be happy, but I'll be okay with it. A lot of times, if I've been patient, there's been many many times that I've done both these things where it's dropped and I panicked and I've sold, and then it recovers weeks or months later or even longer. And I'm like, oh, if I would have just been patient, I would have got my money back and then it would have made a profit even. But we get emotional. So if the stock drops and you're losing money, you have a choice. Be patient and wait. If there is a way for you to sell covered calls, right? Like meaning you own it for $83. I'm giving you my example. You own it for $83, and if it goes to $83 or $84, $85, you're willing to sell it. And if you're going to get paid, in this case, it was $140, $150 per contract, expiring this Friday. Now, if it drops from it's $72, for example, I'm hoping it goes to 83 or higher. I'm going to collect $150 for one contract. I have two contracts I can sell. I'll collect $300 of the current lower value that I'm losing the money on. But if it drops from 72 to 52, what then? Hey, you keep the 300, but now your value has dropped even lower. So then you have to figure out your strategy. Are you okay with holding it even longer for weeks or months, right? And again, all this is at risk where things can not work out. When you have a house, real estate, that's why I really promote real estate. That's kind of the shift I've taken over the past few years, and more so heavily this past year. If you're going to live in the house, as long as you can pay the mortgage, you're going to get value because you live there. You're going to go home every day and use it and live there and pay down the debt. With stocks, the only way you can pay down the debt is if you keep averaging in, right, and bringing your dollar cost average down, but you always run the risk that the company can go bankrupt, okay? And again, this is where you have to do your own research and say, will that happen, or is it just going through a bear market? Is it going through a downtrend? Is this a bad time? Will it recover? So, Coinbase has been around a little bit. I'm not trying to promote Coinbase or say do this. It could be anything. It could be any stock. And that the point is like, if you're in that place where you're concerned and worried, what do I do now? I don't read a lot of comments on those different boards because, they're so confusing. You can hear all these things where it's going up, it's going down, and they give you all this data. And if you just react on that, it's going to probably be a bad decision. But if you say, okay, let me take a hard look at this and make your own decision, whether it's right, whether you're right or you're wrong, you want to do it because you did the research. You did the research to find out whether you thought the company was going to hold out, good or bad, and not just take somebody's word for it. Like, get the facts about the company's liquidity, about what their future is like. What are they going to be doing long term? Is there a need for their product or service? Do they have resilience? Now there's a lot of things there. What are their financial statements? What's their PE ratio? All these different things that you can do to find out about a company versus just straight gambling, right? Like, I don't know, I just like them. I think they're going to do great. Hope is not a plan, as they say. So you got to kind of do a little bit more than that. So if you're in that position today, I would suggest commit to a strategy, like meaning, what am I going to do here? Do I sit it out and wait? And sometimes that will work out, being patient. They say that the stock market rewards patience. If you're patient, Warren Buffett is probably one of the best examples of that. He buys companies he believes in, and he just doesn't sell ever, right? As far as I know, excuse me, he's adding shares, and he keeps building his portfolio. He might sell puts, he might sell covered calls, but his goal is like, I believe in the company, like and he'll buy the company even, because he's so there's such a big company, Berkshire Hathaway, and there might be some lessons in his history, of being an investor. So if you're there today and you're down on your investment, don't panic, because if you make an emotional decision, a lot of times it's not the best outcome when you act in anything. When you act purely on emotions, take a breath, look at it, look at the charts if you know how to read a chart, and make a decision. Either cut your losses, right, move on, don't lose any sleep about it, and stay out of that type of stuff, and only risk if you have $100, $1,000, $10,000, $100,000, whatever that number is. It's probably better to risk a smaller amount of money, 1 or 2% of your portfolio. If that's going to bother you, you could say like, oh, if it went up or down, I'm okay with it either way, right? The 1 or 2% or whatever you want to call it of your portfolio, depending how big it is going to make a big difference to your profits or losses. So if it's a loss, it's not going to hurt as much. If it's a profit, hey, you get a win, right? But if you have a small portfolio, it may not be a big win. First, like, I'm all in, right? And then I'm all out because you lost everything. So, and I've done that. So I'm not telling you I'm preaching to you like this is what you should do. I'm not telling you that. Okay. So anyway, that's my share for the morning. I will see you guys tomorrow.